Gentlemen, call to order the Finance Committee meeting of the Ogdensburg Bridge and Port Authority for Thursday, November 21st. And to begin our meeting, the first order of business is approval of an agreement extension with Strategic Development. Wade, is this available?
Mr. Coffin, both item 1 and item 2 have not been received yet, so we can skip right to item 3, approval of the 2021 budget.
Okay. Let's discuss the budget a bit. Joe and I had some opportunity to take a look at the budget earlier this week. And I appreciated the chance to look at that. Sam, have you had any sense of that?
I haven't had an opportunity to sit down and meet with Joe, but I have read over the packet and the draft proposal budget for next year, yes.
Well, I am appreciative that the draft of the budget shows a positive cash flow of $369,000. And I would like to talk with the authority staff about some of the assumptions that lie under the generation of these figures. And but I also would like to just discuss a little bit about procedures with Joe. Joe, we received the income statement for the month of October. And while this is in a different format, and I think everyone's prepared to change the format and to take some time to get used to the new change. This shows what we received was only for the current month. And I'd be interested in also seeing the year-to-date.
It's not off the press.
So, as a routine basis,
Yep.
could we get,
Yep.
even if it's both,
Yep.
you know, printed separately, and thank you, Steve.
Thank you.
But I wonder if either of you gentlemen have comments about the formatting or any questions about the reasons for the change in format. Hi, Joe.
Hey, how's it going?
Welcome.
I love system-generated reports.
I think this is going to be a welcome change.
Yeah.
At least to following what's going on. How are you, Joe?
And conceivably, it may produce some questions because we're not familiar with this, but
That's good.
that's fine. Do we need to do anything procedurally since Joe has arrived?
Well, procedurally, a couple of things. We'll recognize that at 3:07 p.m. this became a board meeting with the addition of Mr. Andriano. So we'll reflect that in the minutes. At a high level, I'd like to walk through the draft as it stands right now, and then turn over the actual the document, the discussion to Joe. I'd also like to comment that the accounting department has done a fabulous job putting this together, and this is probably one of the best things that we've seen here in a long time. So with that, not to oversell it, looking at the revenue expense, the authority for the next fiscal year, it looks like $9.7 million in revenue, $7.9 million in expense, $1.8 million in operating profit, debt service of $1.3 million, leaving cash available for capital items of just under $500,000, $39 million in grants in, $39 million in grants out, capital expenditures of $364,000, and resulting positive cash flow of $134,000.
You're dealing with numbers that I'm not seeing on my sheet. I wonder what the difference is.
That reflects the changes that you and Joe went over the other day when you were in.
Some of my changes as well. Based on the way this budget, the template itself is set up, you know, I'm not gonna go into the weeds with it, but one of the things is, you know, they don't really have GL numbers in there, the descriptions don't match the GL accounts. Long story short, because you're using the old template, any accounts we added in 2019, there was about 7 or 8 of them. They wouldn't be pulled into the template because we're using a sum if off the trial balance to bring it back in. So they wouldn't get picked up, so I had to go in and add a few more accounts. And when I go do this next year and I start in August, I go, we'll start with the general ledger and the trial balance, work our way forward and roll it up into the consolidated. So that way you capture everything and you're not going back in time to see what you're missing. That is the plan for next year, but that's what caused a few of these. We had a couple revenue accounts that were not included, a couple expense accounts that were not included. Then the way the verbiage is, I went and put GL accounts into the entire template, did a little conditional formatting, found a couple where it had different terminology, but the same GL account, so it was in there twice. That's hence what I'm getting at when I say we start with the trial balance, so you have everything and work your way this way, not start with a template, work your way backwards and see where the heck you are. So,
Could you reread those numbers, Wade? Just so I can-
Yeah, absolutely.
Wait,
Do
is
they have that in
is
front of
there a
them?
reason why we don't have a copy of the current material?
I do not know, I'm just asking that question right now. Do they have a copy of this draft?
The one I just printed out?
Yeah, the one you just printed off right there?
No, I was going to make it for you.
Okay, you will have that momentarily.
Thank you.
Going over some of the assumptions over on page 1.
Before you do that, just so we're all on the same page, then what's in the packet, those numbers on the first page will be corrected. And I believe, Joe, as we go through it, you will let us know exactly why there's changes from the draft we received and what we're gonna receive now, is that correct?
if you need me to dig into the actual template of the budget and go see what got added and what didn't, I mean, it's a matter of adding a handful of accounts. But I mean, I guess I can look at it and tell you what we added.
I'm game just to look at the new draft and
Okay.
not worry about the reason for the transitions.
All right.
I just need some paper in front of me that's the same set of numbers that
Some of
you
the accounts I know is a Skywest account, we just added to the last year. So one of those accounts that's hit those, and we were just redoing the budget. We noticed like some of the budget, numbers were missing. So probably he added to the budget for this
Okay.
year.
So regardless, there's some underlying assumptions here
Yes.
of the budget over on page 1. And these assumptions, just to characterize them, they are not optimistic, they are not pessimistic, they are based on actuals. So there is very little upside included in here. So just to be clear on where we are. Now what that means there isn't any significant uptick on the bridge. That assumes the exchange rate is pretty much where it is now. That assumes no growth at the airport. That assumes a portfolio at the port that is consistent. In Adam's words, he's committed to these things, and he's 100% sure that these things that are in here will materialize. So there are other things out there, but they are not included in here. On the bridge side of things, autos would be up 2.5%, commercial vehicles 1%. Border station would be combined with the bridge, as we talked about previously. On the airport side, there's increases in passenger counts due to the essential air service over last year. The industrial park, it's about the same, most CPI increases, a couple of vacant spaces there. Port of Ogdensburg, similar projects to what we had in 2019, both in size and scope. For the operating expenses, most everything is increasing between 0 and 3% in most expense categories. Management confidential is not included in this budget. It's a separate item at the end of this discussion. We're proposing 2.5%. The CSEA agreement is included. The ILA is included. The budget includes no additional staffing levels. The retirement plans are consistent with prior years. The health insurance is estimated at a 6% increase. Workers' comp, we've got that to include the temporary staff for the wind turbine project. You'll remember how that swings when we have a project and when we don't in various years. Professional fees are included under other expenses. And travel, which we always break out as a best practice, is $33,000 for travel expenses in the upcoming year.
I have a question regarding the commercial assumption.
Yes.
So we're assuming a 1% increase, however, year-to-date, we have a decrease of 6.63% on all other crossings, which is commercial.
That's
And
correct.
so, why are we making an assumption of an increase when our actuals are showing a consistent decrease over the course of the year?
That's a decrease from a good year. The year before was actually a pretty good year. So the decrease, this is a 1% increase over the bad actual year that we're having right now.
Okay, I see. Okay, great.
Yes.
We're making assumptions on exchange rates, do you think?
Yes.
So my question on exchange rates, I had noticed in another piece, we were off of budget on exchange rates on the bridge, maybe. I might correct me wrong, I can't remember the number I read, but it was off pretty significant. Is that?
That's that loss on exchange where things are converted from one account to another.
Okay, so it's not really actually something.
Correct. Correct.
That's a good thing.
Well, no, but it just caught my
No,
attention.
I saw that
I
number.
was surprised that we could be that far off.
Yeah.
But it's not really what I was thinking, so, okay.
Any questions before we jump into page 2?
And just for reference, what was the travel expenses a year ago? Do you recall that?
Same number.
Yeah, it was the same thing as last year.
Yep.
Prior to that, it had been, I would say that a high one year was 79,000 and a low another year was about 50, I think, as you go back in time. Over on page 2, you'll notice some pretty significant changes from prior years, and there's different color codes there. In addition, you'll see the consolidated, the bridge, the airport, the industrial park, and the marine terminal. One thing that you will not see this year is the border station. The border station is now rolled in with the bridge unit, because the border station is no more. Joe, do you want to walk us through the consolidated, walk us through what's changed in terms of the colors, and walk us through the bridge, the airport, and the other units as well, please?
Sure, I guess to start, looking at salaries, there we go. We used to have some employee benefits, some salary expense, and some insurance that used to be allocated within this budget. And Chris and I actually talked about it in our review. In a real system, as we stated, we fight our SAGE system, there's no question about that. It does nothing for us, it fights against us. I mean, everything we do in this thing is a manual journal entry. It is a complete laborious nightmare. Long story short, the right thing to do is to allocate it in the budget, but that's not what we do in our ledger. We don't allocate that. You know, for example, in 2019, we would have a paycheck feed that would feed right into our ledger, and you put the allocation of the percentage and where you want it to flow to accounts. Here, we literally key into an Excel spreadsheet the manual amounts, and we post it. So for example, the people that should be allocated, like the admin folks, the finance folks, you know, that kind of stuff, they're not allocated in Sage. And to do that would just create an enormous amount of manual labor. So this budget truly reflects what's in our system, what's in the Sage General Ledger system, how it flows. You know, so those salaries, the admin, the finance, they're all posted to the bridge. So now they're all budgeted to the bridge, because we just don't have the manpower or the ability to split those out monthly on a manual basis. It just takes so long now. And a lot of that is because of the functionality of what we use.
We weren't really doing anything with that data anyway, were we?
I mean,
We weren't really.
Well, I think
we
so.
should have been.
We should have been, but we, I'm
It's
just.
never
I
happened.
don't think
It's
anything's
never been
happened.
like that. So what you have is, you know, you've got budget dollars split, and then you got the big hit going to the bridge, because it's not allocated.
So you can actually see it a lot better if you look under line 2, for example, the yellow line with the employee benefits. What you see is you see total consolidated of $2.3 million in salary expenses. You see $1.1 million in bennies. And then you'll see right to the right of that, $1.1 million all to the bridge. And corresponding, everything else is 0 across there. Now what does that do? Real world impact of that? That arguably penalizes the bridge for about an extra $500,000 that would normally be in the other categories. But it doesn't amount to a hill of beans anyway, because it's not how we actually do the reporting. So there's a little bit of a disconnect versus how you might have seen this in prior years, but it's actually more reflective of what of the way we do it, and it's more reflective of what's going on an actual basis.
I'm game.
Yep, sounds good.
I think it'll make it harder for us to quickly appreciate every month, let's say, whether the airport is doing well or whether the industrial park is doing well. But if we ever really want to study that question, I think that we can calculate what would be assigned, what would be the appropriate charge to the department. But that in the meantime, on every month, in terms of getting the books closed and getting these reports out into balance, and leaving the accounting department with time to post invoices promptly and stay up to date on their other tasks, that let's deal with what is generated, deal with the reports, the numbers as they're generated.
And now you have a budget that clearly is correlated to what the system says.
That's right. So that's a change in format that I will not change, let's say, the consolidated bottom line a penny.
No,
That's right.
like I said, you know, if we're lucky enough to eventually go to a different system, then we can set that kind of things up.
It'll be
You
one
know,
of the
paychecks, we
specs
just
for
feed
the
it in and
system.
it's automatic. I mean, obviously where I come from a large, you know, Fortune 50, you know, corporations, and everything is fed in. I mean, we have $15 million worth of fleet vehicles fed to all the departments, all the intercompanies, everything, and then they send you the detail that goes with it if you need it. You know, and that's really, that's a game. The system needs to be a game. I mean, we fight this thing because it's so manually intensive, and that just opens you up for, you know, risk for manual error on top of it.
Now, insurance also falls into the same boat. You'll notice on the blue line there, the insurance, the consolidated insurance is $322,000, round numbers, what we pay in insurance, and that is 100% assigned to the bridge. And again, that's consistent with how it's actually done. Other expenses, as I mentioned previously, that's professional fees, a couple examples in there. Management fees, the MAPCO parking, janitorial, law enforcement, IT, other various things that we've talked about over time. So that's in the other expenses line, the orange line there. And that is still split out amongst the various units, the bridge, the airport, the industrial park, and the marine terminal.
Any questions on the change in procedure? I wonder whether the department heads like John and Stephanie and Steve, is this gonna be a system you can work with in terms of the accountability that you have for your budgets?
It'll be a little bit more difficult, but I believe we can get the information that we need. It hasn't really been separated out before anyway, so it's not any different than what it is, what it currently is doing.
Yeah, when it wasn't allocated, it was equally as,
Just for example, this year, I don't know what's done in the past, it's none of my concern. You know, I sat with Steve for 2 hours, I reviewed everything with Adam on the phone to make sure we were 100% of what we were budgeting for the revenue. Steph and I were in there for 5 hours, and John and I were in there for a couple. But when I start this procedure next year earlier, I'll start my piece in August, have everything built for them. Everyone will get the same template instead of these guys filling out 4 different templates that don't coincide with what I need, and then I'm putting the, you know, the square peg in the round hole. So I'm gonna rebuild this so it's just easy, and then have more conversations with these guys, because I'm gonna be starting earlier, and then I'll have more conversation with you, and then I'm certainly going to have a conversation with you. that's kind of how I see it going next year. I mean, I'm pretty happy with how this turned out, not, you know, I obviously don't have the in-depth accounting knowledge of this yet, but I will, and it's gonna be twice as easy next year, A, because it's gonna be a little different format, and B, I'm gonna have the knowledge and be able to get in the weeds. You know, some of this stuff actually came up, like the missing accounts, as Free and I were going through this month's financial statements. So we sat down, ran all the detail, not to change the subject, but, you know, we ran all the detail, we're going through, looking at the variances, and then, you know, between the two of us, it was great, because she knows a lot more than I do about what's in this system. So it was a learning experience, and we found we found some things in new accounts, and I'm like, oh yeah, that would make sense, because the template was built prior to, you know, it's just backwards, the cart's before the horse. So it's all coming together.
In the review process, I would also add that it took, and I apologize, I don't mean to
No,
make this
you're
a
good.
mutual admiration society here, but what took, normally would take a couple hours at a time and then have to perform 2 and 3 and 4 different reviews, was reduced to 45 minutes. I mean, that's the difference of using system-generated reports, building this budget packet with things that you can look at, things that you can believe, and assumptions that are clear.
Chris, two things that when you spoke to me, first of all, this is the first time I've ever seen a variance on a 7-month budget. And that's where I come from. So basically, I know my numbers for my budget, and maybe, you know, not everybody knows the details, but when I look at the variance, it may send up a signal to me to go, ooh, what blew that up? And
That's right.
and so I can look at that and I would have answers for you so that I can work actually backwards. I have them, like, the way that Joe's talking for August type of thing is I can have my own all detail, and basically as the budget goes along through the budget year, I can work backwards and go, ooh, I blew this up, or rather than confuse everybody with my details, basically I'll have one number for one item or one thing on there, and then the big thing that I really appreciate and that he understands is that variance, because when I can explain a variance really much easier in a really quick way, and then if you need details, then I can dig back that way. So
Yeah.
I'm kind of, the variance is a real big thing for me. I'm glad to see that.
Super. Steve, I remember that there were changes in the staff in your department in August or this
Yes.
summer. And I assume that since you talked with Joe, that all those positions are covered in this new budget.
Yeah, the existing ones, we haven't added any union positions or anything like that, but they're all covered, status quo for next year, for this budget.
Yeah, they're all included in here, in other
They're
words.
included, but there wasn't any additional positions.
But the ones that have been authorized and that you, at this point, know you're gonna have next year or plan to have next year, those are all included.
Yes, correct.
So, help me understand, what are you telling me when you say no union positions?
Well, at one time when I talked to you, that we were considering going with changing the temporary crew members over to union positions. But
Yes.
as it stands now, we're staying status quo with that
Okay.
and not, and part of that, there may be a tie-in with the bridge project this year that, you know, I need to do a lot out there, but if the bridge project goes through, it'll be a huge help, and it would be just one more year that we could go the same manpower. But if things fall through on that, like I warned the last time, we're gonna have issues with maintenance issues out there, and it's all gonna be dependent on whether that Tiger Grant project goes through next year,
Yep.
or this coming year. Did you feel better about that?
I am always strained to understand, but I believe that all makes sense. Sam, does this make sense?
Yeah, we haven't,
Okay.
as a board, we haven't gone through that resolution yet to create those positions.
Correct.
Yeah, we've discussed it, but we haven't made the motion to do it.
Well, it sounds to me as if it's prudent to budget for the staff that we have now,
Yeah,
as opposed to contemplating other things in later. make a decision to change something, then at that point we can discuss
Mhm.
adapting the budget.
Mhm.
And it would be great if we could keep the budget current with changes that we make as the year goes along.
Where would you like to go in terms of diving into the meat of this?
Well, I'd like to make sure that the other board members have a chance to ask questions if they do have questions. And is there anything more, Joe, that you want to say in terms of explaining your procedures and how you arrived at these estimates and these numbers?
Well, we could talk about the general, the general philosophy that you and I walked through on how we did it. Basically, we took the first 6 months of we'll just talk about we'll use maintenance expense. Took what was in the template, the GL accounts, the first 6 months of April 1st through September 30th. It's in Excel, it's in a trial balance, do a sum F, brings back the amount for the 6 months from the trial balance without paying it in and having to go link it and bring it over. It just does the formula and brings it back for you. That gives me my first 6 months of actual. The second 6 months would be projected October through March. And then that number, the 6 month actual, the 6 month projected will equal your projection for the year. That's where approximately you should end up for the year. And depending on, it's an account with seasonality, you have to take all that into consideration.
And then was that reviewed by the department heads?
That was reviewed with
So,
us.
so that
We all sat
there
down
were
and threw 'em.
cases where, I'm sure, where people said, no, this number's gotta be higher for the second half. Or
Yes.
we use more ice in the wintertime than we do in the summertime, or de-icing. And I think that produces the best estimate that we can make for current year.
And then, like I said, sitting with the department heads, we use that as a base, and then we go through every line item and say, like the base, for example, for bridge inspection, well, it turned out to be like, whatever, 177 or 78 grand for the first, I have my budget file open, so that's kind of unfair. But, for example, we have a $218,000 every other year due in 2020, the bridge inspection. So, we needed to make that line 218 grand because it's coming. So every line is talked about and discussed, and we use that as our baseline number, the 6 plus 6, and then we discuss every line item, and, they'll say, hey, I really need this, or this is gonna be coming, or, that kind of thing. So like I said, every line is reviewed, every expense line is reviewed in here, every revenue line is reviewed in here. So, and it was nice, having Kathy populate the new contracts for like the IT revenue. She went in and filled in the temp, and just showed her what I needed to do and what I needed to have, and she went on to the new rates, salaries, for example. It's right from the paycheck data. And we also have the increases for the CSEA contract, so I know exactly what their rate is. It's all pretty scientific, actually.
As it should be.
Yeah, and then like you said, then you have the resident experts come in and say, no, well, I know that's gonna be low because this is gonna happen to me. This is gonna occur this year. Okay, I will put more money in there.
So, capital expenditures and operations that's listed here, it's the same as what's on page 16, I see. The details on page 16 are right there.
Yes.
Steve, most of that is really industrial park, and it's air conditioning units
Yes,
and a roof. Is that due to the storm we had a few weeks ago?
no, that's the older part, that's the 1995 path,
Oh,
and that's the one I've got all kinds of backup for that, but, we've been getting a number of calls for roof leaks over the last 6-8 months, and just quickly is when they did the roof inspection, the material is just wearing through. It's at 30 years, about 25 years of its useful life. So we're just starting to get more roof leaks, and we haven't done a roof replacement since 2007, I believe. over there, we used to do them every 2 years, we'd pick a roof there when I got here, but, that all slowed up.
Who's in 11, Tom?
Nexus
Army
and
going in.
Army going in.
So that there's still space available in that building, isn't it?
No,
So it's full.
it's 20,
Yeah.
20 each.
So we do need to make sure that's taken care of. I just wanted to make sure
Yeah.
it tied in with,
Yeah,
we're
that,
looking at on page 2 with page 16.
One other quick note about page 16 as well, on the airport side of things, you notice the ACIP plan, the federal year, there's two portions of a federal year in OBPA's state year. So it's half the plan from federal fiscal year 1 and half from federal fiscal year 2.
Will this complete the mound?
It's in and out.
It should, they have not started that project, it got too late into the season, so they haven't started the Malza project. The AWAS project is completed.
How does this page 16 tie back to page 2? I don't see the connection.
Oh, right here, capital expenditures operations. On page 2.
Ties in with a line right above net income loss.
Yeah.
Got it?
Yeah.
So for example, capital expenditures in total, 364,000.
Right.
86,000 on the bridge, 238,000 in the industrial park, and 41,000 at the marine terminal.
Yeah, I'm just looking at,
On page 16, where do I find those numbers?
if you add up under industrial park,
Show me
those,
where.
from the 21,000 to the 6.5,
Okay.
21 to the 6,500, I believe that totals 237,500, is that right, Steve?
I'm not sure on the, I see the 498 at the
Yeah.
bottom.
Say it's right.
Yep, it's actually
498, and then it should be,
H13 to H15, which is, so H13 to 15 gives me the 32 plus the 21 plus the 75, plus the 60, 50. And then, back over to see the first, that is, H23 and H24.
How about a suggestion for future versions? Future versions of this, down in the spot where it says draft, there should be something in there that ties out and specifically matches page 2. As I see where that's generating confusion.
Yeah, I can pull them right
I
over.
looked at the power,
Yeah, I think that would be
and
helpful in the
it
future.
totals up to
I have a
41,500.
question that would belie my lack of familiarity with these things. So on page 2, we have our incomes, and there's a lot of stuff
Close enough.
as losses in the income section. I'm sure that's normal, I'm just sort of trying to understand why we would indicate a loss in a section about income instead of as an expense. Like, for example, or perhaps I'm just reading this wrong, but, looking at, it says net income cash flows, and then it sort of goes down, this is sort of the second half of the page here, so sort of starting with the line net income cash flows, everything down from there, are those expenses, or, I guess I'm just a little confused, because there's this line net income cash flows, and then, is that line in bold there indicative of something else, or indicative of what comes after it? Are those also expenses?
But the net income from cash flows is either gonna be positive or negative, right? Your income less your expenses. In this case, the expenses are a little bit higher.
Yep.
And then you take into consideration the stuff below the line, the 165 and the 85.
Mhm.
That will get you, and the 97 will get you to because the 2 million, the 12 million one, and the 14, they obviously wash
Mhm.
the
Yep.
operating grants for the state, and, those three lines wash. So you got your 97 plus your 165 plus your 85,
Mhm.
gets you to the 348.
Okay, and so that, and those are broken down sort of down there, I guess I'm just not, this is sort of a form I've never seen before, and so just sort of trying to understand.
Yep.
Sort of, why there is sort of, the net income cash flows, and then there's sort of these additional things, those, because they're some of those are capital expenditures, or, it's probably immaterial. So I'm not on the finance committee.
No, it's, I mean,
That's a good question.
I just used the template I had. I can
Yeah, yeah,
change
no,
it,
I
make it
understand
any way-
that.
You know what I mean, any way we
Probably
like it,
change the
but,
name from net income
yeah, I don't know.
or something.
Yeah, I'm just sort of curious,
It's
and
really
just
below
trying
the
to
line.
interpret this, and sort of seeing those there, just sort of curious why that middle section was separated off of the other expenses, and some of them were incomes and some of them were not income. But it seems like it's immaterial is sort of the answer.
I think, John, that my understanding, which may not be an
Mhm.
excellent understanding, has always been that I'm trying to look at the routine operations as one segment,
Mhm.
and then special projects, some of which are.
Okay,
grant funded,
that's very
some of
helpful,
it is
yeah, got
separate.
it, yeah, okay, that answers the question for me, great, thanks.
And then the reason I asked about capital expenditures is because I like details.
Yep,
So, I mean, I can see it on the consolidated, I want to see what we're actually looking at. And actually, you know, I thought we had talked a little bit more about what was needed down at the port, but I guess you have to adjust your requested capital equipment by whatever funds we have.
Right, basically, I know what I'm up against.
Okay.
And we do have that Port Railroad grant that John's been working on, and, you know, if all of that can come through, that sets us up with the heavy stuff with conveyors and things like that, that would really be, as far as some of these projects, the income would be to us if we have that equipment.
Right.
So, and the same goes, like you see in there, I know it's small, but the forklift, we spend on a project, we probably spend $8,000 on a rental forklift. And so the idea would be, let's get that, and it'll generate enough money to pay itself off in a couple of years, so that's,
Right, I don't know the rest of the board knows when I first came on, back onto the board,